Good evening, everyone. I hope you all are having an amazing weekend. Let's start off with a very nice topic that a lot of people have been asking about. Like how are you looking at gaps? How are you drawing your gaps? How are you tracking your gaps? And why are gaps important? Specifically, when I talk about island tops, island bottoms, people kind of get confused, which I think is better if I like kind of talk about it on a weekly video and draw it right in front of you, and like we can go from there. After that, we'll also talk about our weekly seasonality, then our economic calendar, then comes the earnings calendar, and after that, we'll talk about SPY, QQQ, IWM, and then the core list of companies and a few trade ideas that I already shared with most of you guys in our game plan channel. I will go over that also. I'll go over those along with the charts at the end of the video. So without further ado, let me get right into the charts here. Let me start with QQQ because SPY I usually keep. I'm already there, and I'm already tracking all those gaps. One thing that I'll tell you though, don't try to do this kind of a analysis on all the stocks you're trading. Try to keep it as low as possible, as minimal as possible. I just do it on QQQ and SPY. If you want to do it on specific stocks, that's totally fine. But if you are trying to track through for all the things on the internet, I don't think you can. You will be able to follow it because once you kind of know where QQQ and SPY is kind of going, you can assess where things can where you can stand with certain sectors and things like that. So specifically when it's around certain sectors or certain indices, that's essentially where I'm trying to track these gaps. So I track gaps on the 65-minute time frame. I don't really do it on the daily time frame. I don't see the clearer and a much better picture. You can definitely do it on a 15-minute, 4-hour, whatever that is. But for me, 65-minute is where it kind of stands out. It's much clearer, and it feels better to track them on the 65-minute. So quickly looking at the 65-minute chart on QQQ, where do you think the island bottom is? I'll give you a couple of seconds to look at the chart. You don't have to be tech savvy or anything like that. Where do you think the island bottom here is, or the island bottom gap was formed? This is where you are seeing that island bottom, right? Like you see there was so why do I say that's an island, and why do I say it's an island gap per se, right? Like what happened here was, you see in TrendSpider there's this nice little tool. If you see this Alt E, you can use that as well. You see there was a gap down here, right? Like there was a bear gap that was open, right? Like there was a bear gap that opened up. Bulls were not able to fill it on this particular day completely. They left most of this gap open, right? That's the bear gap that got opened, which means when does a bear gap get opened? It basically gets opened when bears are strong, and there is negative sentiment in the market, or there is more selling than buying in the market, or things like that, right? There is that sentiment that has crept into the market where people are a little bit scared to buy, right? That's when or people are willing to sell at these particular prices. They think the prices are too high. That's when you see a little bit of a gap down, right? But and when does it not get filled? When there is some bearish sentiment that crept into the market, or people are not convinced the market will move any higher. That's when you see a bear gap. But after that, right, this is you see you keep an eye out for what I'm looking at, right? Like this is the close on this was Tuesday is when we closed, and then Wednesday we opened with a gap down, and we were not able to completely fill the gap, right? Like this gap was left open. But what happened coming to Thursday was bears stepped up. They said, hey, I don't think the market is going to sell off. I think we are just going to gap. I think we are going back to all-time highs, or going back higher. So since the close, right? This is where we closed it, and then we opened all the way here, right? So let me make that a green color, how I kind of track it, right? So now what happened, all the bears who saw this gap down, who saw that there was this bearish sentiment that came into the market, and the bulls are getting weaker for some odd reason, they started to say, okay, I'm going to short this market here. But then what happened the next day? They got really squeezed out, right? Like even though they gapped it up, yes, they did lose some of their territory, the bulls. But then you see this overlap here, right? Like you see the bear gap and the bull gap overlap and create a nice little island here, right? This island here is not really connected to anything at all, right? Like none of the bodies are really connected. So this has become an island. This has become a situation where the bears were trapped. They were basically just trying to come out of their hole and trying to short the market down, because they finally saw some kind of a bearish sentiment with the bear gap open. But then once the bulls have gapped it over and created that island, now bears are like stuck there, like they are sitting there and they don't know where to put their stop losses at, right? So that is essentially what is happening. So when the market kind of turns around, when the market kind of sees that little bit of a correction, this is the area where the bulls will be sitting around and saying, and there's also a little bit of a FOMO that the bulls kind of have, right? Like the bulls that did not position in on this pullback, they were like, okay, you know what? I'm going to miss out. I'm already missing out on a lot of rally here. Now we did see this, and the bears are trapped, and I want to step into the market. So those are the people who kind of create that little bit of a FOMO also. So this squeeze that you have seen, yes, there are multiple reasons that I can give you why there was that little squeeze that happened. If you look at Jan OPEX itself, there is quite a huge bullish skew that happened into the Mag 7, and that's what kind of created that squeeze. And there are multiple things that you can talk about, but I'm not going to talk about that here. So right now, the psychology that we are looking at here is that island gap that was created is extremely bullish, and any dip towards that island gap will be by the dip opportunity for the bulls. I think bears will be absolutely shot down once we get down to that island bottom gap. So that is essentially how I kind of track these gaps, right? Like you see some kind of an overlap like that. Like previously I kind of showed you how island tops are formed, right? Like it's the exact same thing. You have a gap up and then you have a gap down. So if for example we gapped under, let's say we started the day tomorrow at around 414 or 413, let's say, I'm just giving you a random number somewhere up here, right? So you had a gap up here which is unfilled, and then you have a gap down which will create that island top, right? Like this particular area will become an island top, and that's when okay, you know what, bulls are ready to attack, and something like that is going to happen. Let's say we did not see this at all. Like I'm just telling you, asking you to imagine stuff, right? So that's when you'll probably see an island top. That's when you're like, okay, you know what, market, I'm done with being long. I will be a little bit more cautious with my long positions, and I'll probably short every pop that until and unless that particular island top is completely filled out. If you also remember with SPY, I said until and unless that island top was filled on the 65-minute chart. I've said this multiple times in November too. Like we were long for that rally, but then until and unless that island top is filled, I'm not going to say we are going to see all-time highs. And once that island top is filled, if you all remember that tweet, I was saying we will probably see all-time highs in the next couple of months, and that's where we are at right now, right? So those are some very you won't see island tops and island bottoms every week. You won't see them every month. You'll probably see them mostly once a quarter or once half a year or something like that. And these are very strong signals. And once they are filled, and they will create a bounce, but then that is when you want to be a little bit more cautious too on that bounce, saying, okay, you know what, I think bulls or bears are trying to are losing that momentum that they have created with these islands. So that is the essence of how I kind of track these bull gaps. I mean, island bull gaps and island bear gaps here. So just to track the gaps, right? Like this is something that you can do where you can just go click on that box, and once you I start with the body of the previous day and calculate the wicks of the next day, right? Like for example, this is where we closed on Thursday, and we opened all the way at 415, but then the bears were able to fluctuate the price a little bit, and the bull gap kind of a little bit got filled out, right? So I kind of make sure I adjust that price accordingly as and how they kind of get it filled. So right here also I will say we'll probably go there, and then this is where we have the island bull gap that is open still. So these are how I kind of track these gaps. I track the island bull gaps and island bear gaps, and once a bull gap gets filled, it will act as a nice support for the bulls when the intraday, right? Like when that keep that in mind, when the the bear gap gets filled, it will act as resistance. When island gap is filled, it will act as a strong support or a strong resistance for multiple days.